So the main question we then ask ourselves is, what would the IPSAS do for Ghana? Like, what are the benefits of the IPSAS? Okay, what are the benefits of the IPSAS? So let's discuss a couple of benefits of the IPSAS. Number one, improves transparency by providing complete view of government business and performance. It improves transparency, okay, by providing complete view of government business and performance. So we can understand what is happening, we can know what is happening. You know, under the cash basis of accounting, which Ghana was previously using, what happens was that because it's cash basis, we only recognize, and we will get into these later, but since we are looking at the overview, that's why I'm taking you there a little bit. Under the cash basis, as you may know already, you recognize transaction when the cash is received or paid. That means that you don't really provide a complete view of government activities. Okay, so you only say you paid something if you pay it. What if you signed a contract and not finished paying it? What if you rendered a service and not received the money yet? So the IPSAS accrual, IPSAS adoption is going to really provide transparency so that we will know that, okay, we signed a contract of 3 billion Ghana cedis, we paid 1.5 billion Ghana cedis, remaining 1.5 billion Ghana cedis, we are making a contingency of 10% of that for something, because that is how the accrual basis is going to be. 2. High level of accountability by ensuring accurate recording of government performance and status. High level of accountability. Because if the government is transparent enough through the usage of the IPSAS to really have a complete view of government businesses and performance, then it will now bring a high level of what? Accountability. So we can account for, okay, this is how much money we got, these are the expenses we incur, these are what are outstanding, these are the contingency we built up, and these are the things that we're doing. So that is what you have to understand about the benefits of using the IPSAS as well. Number 3, there is greater credibility as governments use same accounting standards. Greater credibility as government use same accounting standards, right? So that is what, so your transparency level 1, it enhances your accountability level 2, and then it increases your credibility as a country in the League of Nations across the world. The number 4, more effective monitoring of the existence and value of assets and liability through effective asset management. That is also very critical. So because we are using the accrual basis, IPSAS, what is going to happen is that you're going to purchase assets and you're not going to write it off like cash basis, but you recognize the assets, provide for provision for depreciation of the assets, revalue the assets where necessary, make deal with impairment of assets, so you can effectively manage your assets as a country in relation to that. Number 5, better matching of cost to revenue by depreciation of assets. Okay, under the cash basis, there was nothing like capital consumption or depreciation of assets. That's one of the terminologies. In public sector, we will say capital consumption. In private sector, we call it depreciation. So these are some of the things there. So when we adopt the IPSAS, the matching concept is really rich there in relation to that. Next point, support better decision making by using quality information. Yes, because once you're able to be transparent in the accounting system, all other things being equal, once you need to be accountable, once you are credible, once you're able to monitor and match your revenue against your cost very well, then that will enable you to make a better decision, which is based on what? Quality information. So you're not only having just cash information, but you're having all information necessary for you to be able to make the decision that you need to make in relation to that. Next point, harmonization of reports and statements across nations. Harmonization of reports and statements across nations. Because the IPSAS is not a national standard, it's a globally accepted standard. Countries across the globe are using it, so it brings them harmony in relation to comparison of financial statements among countries, which leads me to the last point, which is better comparison of financial statements among countries. Better comparison of financial statements among countries. So these are some of the benefits that we can talk about in relation to how we will be able to find out about the benefits of adopting the IPSAS. Okay, so if these are the benefits, one question we need to ask ourselves is, remember I've told you Ghana did the adoption, they did the stakeholder meetings, they did the adoption, and in November 28, 2018, the implementation was launched. But what has been the journey so far for Ghana's adoption of the IPSAS? First, IPSAS Secretariat established in the Controller Accountant General Department. So that has been established. That was why the implementation was launched in 2018. IPSAS implementation strategy development, that is how they are going to develop, that they are going to implement the IPSAS actually. Capacity building for IPSAS implementation committee members. So there is a committee put together by the Controller Accountant General with consultation from the ICAG, Institute of Chartered Accountants Ghana, and this committee was trained in relation to how they can implement the IPSAS in various MDAs and MMDAs. Liability and provisions included in financial statements since 2010, so right after that they included that as well. Fixed assets capitalized and depreciation thereafter charged since 2012. Modified accrual accounting basis being used currently for production of consolidated fund financial statement. Now we will get into the various accounting bases. I hope you've already done this, okay? So we have the cash basis, accrual basis, modified cash basis, and modified accrual basis. Now, the modified accrual basis is where you're using two bases of accounting. In other words, you recognize revenue on cash basis and you recognize the expenditure on the accrual basis. So currently, that's what is being used. As of the time this video was being shown, that is in 2019 into 2020. You're almost into 2020 in relation to that. Now, funding of this implementation is definitely we have support, part funding from the World Bank. You know, they will help us in the funding in relation to that. So that is what you must understand briefly in relation to IPSAS in general. Briefly in relation to IPSAS in general. Okay, that's it in relation to IPSAS in general. Now, so to conclude on this session in understanding the IPSAS, let's spend some time to look at the objective of the IPSAB, that is the International Public Sector Accounting Standard Board, and let's look at how they intend to achieve the objective, and then let's conclude on the scope of the standards. So, objective of the International Public Sector Accounting Standard Board: 1. To serve the public interest by developing high public sector financial reporting standards and other publications for use by public sector entities around the world in the preparation of general purpose financial statements. So that's the first objective. They want to serve the public interest by providing high quality financial reporting standards for the public sector across the world. 2. It facilitates the convergence of international and national standards. That's it. We want to bring that harmony, bring that convergence. That is why I told you earlier, the IPSAS are just the same as the IFRSs, the IASs in financial reporting, with just a modification suitable for the public sector. And then 3, enhance the quality and uniformity of financial reporting throughout the world. So, if that is their objective, how do they intend to achieve this objective? 4 things there as well. The IPSAS achieve its objective through the issuing of the IPSAS. We've said that already. It's also issue recommended practice guidelines to provide guidelines on good practices that public sector entities are encouraged to follow. This is very important. RPG. Okay? RPG. Recommended practice guidelines, and there are a number of them. Guidelines 1, guideline 2, guideline 3. These are specific to the public sector. They are not in the IPSAS, okay? So we have a RPG 1, RPG 2, RPG 3 in that order, and to provide guidance on various things that the public sector organizations must follow, or public sector entities must follow in their preparation and presentation of financial statements. 3. Promoting the acceptance and convergence of IPSAS to IFRS. So, to be able to enhance quality and uniformity of financial reporting throughout the world, they promote that countries should come on board, accept the IPSAS, and that the IPSAS is just the same as the IFRS. And then the last one is publishing other documents which provide guidance on issue and experience in financial reporting in the public sector. Alright, so that is what you have to understand about the objectives and how they intend to achieve that objective. Finally, certainly, the scope of the standards. Now, each standard has its own scope, and we'll get into that when we start with IPSAS 1 to IPSAS 40. Each standard has its own scope, but what we want to discuss here is the general scope of the IPSAS. Okay, in general, what the IPSAS cover. The International Public Sector Accounting Standard Board develops IPSAS. So one, IPSAS developed IPSAS which apply to both accrual and cash basis of accounting. So that is one of the things you must understand. So we have the cash basis IPSAS, and then we have the accrual basis IPSAS. But the accrual basis is the ultimate thing that we're looking for. The reason why the cash basis was also added was that countries that cannot adopt ad hocly the accrual basis can use the IPSAS cash basis, which means they will still be using the cash basis, but they will be making certain disclosures in their footnotes in their notes to the financial statement. 2. The IPSAS sets out recognition, measurement, presentation, and disclosure requirements dealing with transactions and events in general purpose financial statement. That is also very critical. So in each standard, we are going to look at recognition, we're going to look at measurement, we're going to look at presentation, and also disclosure requirements. So for each IPSAS you pick, all other things being equal, these 4 things are going to be critical for us. Next one. The IPSAS are designed to apply to the general purpose financial statement of all public sector entities. So all public sector entities, the IPSAS covers you. Whether you are in education, you are in food, you are in agriculture, you are in the world, you are in one district, one factory, whatever entity you are, as far as you are a public sector entity, we got you covered in the IPSAS. Next one. Any limitation on the applicability of specific IPSAS is made clear in those standards. Because you see, the standards are limited in some way. So statements are not generalized. So there are sometimes they will say you can recognize an asset if these conditions are met, except, so any limitations that except for are made available in each standard respectively. Then the last one is the IPSAB, that is the International Public Sector Accounting Standard Board, has adopted a policy that all paragraphs in IPSAS have equal authority. What it means is that each paragraph in each of the standards have equal authority. You don't prioritize one over the other because it is the standards together that provides us with deeper understanding in relation to what we are doing. So basically, these are what you need to understand about the IPSAS. Now, to conclude on this slide in relation to what we're doing, let me begin with giving you the various ideas of the IPSAS in general. So I think that this will be put projected on your screen there for you, the right side of your screen there, for you to see what is here. I'll be just going through them for you. Now, like I mentioned earlier, the IPSAS, their pronouncements are based on, almost all of them are based on the International Financial Reporting Standards. So it's going to be very easy here, okay? But as I said, terminologies are going to be different because the ISBAB makes modification for that. So you will see IPSAS, you will see pronouncement, and you see based on. Okay, so let's go. IPSAS 1 is presentation of financial statements, and that is based on IAS 1. So the same thing about IAS 1, definition of assets, the various financial statements, objectives of financial statements. That's IAS 1, and that is IPSAS 1. IPSAS 2, cash flow statements. Now, for your information, the syllabus requires that you have an in-depth understanding of this. Okay, let me actually go to the syllabus quickly and just explain something to you in the syllabus, because the syllabus indicates the level of understanding you must have for the IASs, the IFRSs, the auditing standards. Okay, so there are 3 levels of knowledge that you require about accounting standards as well as about IPSAS. So let me go through that with you. This is in the appendix of the syllabus. That's the ICAG syllabus. Okay, so let's see. Level 1. So when I mention a pronouncement, I'll talk about the level that it is. And the level that I mentioned will tell you whether you need a deeper understanding or just a knowledge of the standard. So if you look at appendix